Thank you all so much for joining us here at the main stage. I'm joined, like Zach said, by two incredible guests, Sergey and Jack, Chainlink and Swift. I think the most obvious question that we can start off with, maybe Sergey, you can talk about this. Why do we have Chainlink, a crypto company, here on stage with Swift, a kind of bastion of traditional finance?
Well, it's actually because traditional finance and the crypto blockchain industry are very compatible. It just takes time to do that because traditional finance has all of these regulations and requirements that it needs to meet, many of them legal, basically. And the crypto industry has a massive amount of value in terms of tokenizing assets, creating DeFi protocols, smart contracts as autonomous agents to execute transactions and financial products. So the fundamental value of the crypto and blockchain industry, I think, is now having profound kind of effect on the TradFi industry. And Chainlink is driving a lot of that innovation in the DeFi community and in the public blockchain community. And in working with Swift for over 7 years, I found that it's really the same set of problems. Just one group can move very quickly because it's smaller teams that don't worry too much about certain legal requirements. And the other group has the same set of fundamental problems around transactions, risk, value. But they are, because of the amount of value they hold, literally hundreds of trillions of dollars, required to comply with certain things. And so they just move at different speeds, but eventually we'll all end up in the same place on a single internet of contracts. And that'll be, through protocols like Chainlink on the blockchain side, and it'll be through protocols like Swift on the traditional side.
So, Jack, it's awesome having you here today. I know you've talked at, or at least Swift has spoken at crypto conferences in the past. And traditionally, Swift has kind of been like a blockchain boogeyman in a certain sense, where it's like, this is the traditional pipes, rails on which our financial system runs. And crypto is trying to sort of transform that and make, have a whole revolution in how we deal with our finances, move money, move assets online. So can you talk a little bit about how Swift has kind of come to this more homogenous or more, this new view, I guess, or is it new? Like, how long have you been thinking about how to integrate these two systems with one another?
Yeah, good question. And I think this is our first time as a company at Consensus, and you can see the gradual evolution of this becoming a bit more institutionalized and not just crypto native. But I think as Sergey was pointing out, when we look at our community, right? Swift is a cooperative that's owned by financial institutions that make up our membership. More and more of the banks and institutions are actually launching their own tokenization platforms. They're starting to test out this technology for the potential benefits that it can bring. And so as we see more of our membership looking to engage with tokenized assets across the different life cycle of different asset classes, it's natural for us to try and step in and be able to support our community with interacting with those. And so when you look at Chainlink and Swift, I mean, Swift has over 11,000 financial institutions today, 235 plus market infrastructures, but Chainlink is a strong complement in the sense that they have all the integration to all the different blockchain networks that exist today. So why would Swift think it's in our best interest or the community's best interest to try and go and integrate with all these different blockchains and all the different kind of know-how that you need to have to do that when you have a strong player and a partner in Chainlink already that's doing that today?
So practically speaking, what does this partnership actually look like from your end, from the Swift end? What are you doing with Chainlink that customers might actually see?
Yeah, so I mean, we announced the results of a POC at the, I think like Q3 last year, where we worked with over a dozen institutions and Chainlink to understand how can our community today leverage a lot of the existing infrastructure that they have in place to be able to interact with tokenized assets or different kind of tokenized value on different blockchains. So we tested a couple of different corridors, say public to public, public to private, and really it's around enabling adoption or giving a path towards quicker adoption, because institutions don't know which blockchains they're going to have to connect to, or they know what they have today, but in the future, like how do you know in 5 years these blockchains will be around? And they don't want to have to go and invest in entirely new parallel infrastructure in order to do that. So they have all the investment that they've ramped up in Swift for a number of years. And when you think about a return on investment and kind of speed to market, can they just leverage all the existing infrastructure, processes, connectivity, messaging, et cetera, to be able to access these new networks, right? And so that's kind of what we've done with Chainlink. We successfully demonstrated that from a technical standpoint, and a number of the institutions that are members of Swift are also having conversations with Chainlink, and we had a good collaborative experiment there.
Yeah, and so Sergey, kind of a similar question to you. Like, how do you reconcile these sort of this sort of dichotomy, I guess, between the Swift more centralized institution approach with blockchain's decentralized, open sort of framework platform approach to finance? Does that play a role in how you develop your products?
I think it's important for folks to understand what Swift is. The way that I view Swift is as three things. It's the world's most valuable and the most widely used private key signing infrastructure, signing the most valuable transactions historically across, over 11,000 banks. It's basically the shared language of the financial industry in the form of ISO 20022 and other similar standards to define transactions. And it's an infrastructure for the messages that were signed by those private keys and formed in that shared ISO 20022 language to be transmitted in a way that is actually practically useful. Also, Swift is owned by its members, so it's very interesting. It's not a purely for-profit thing. People talk about DAOs and all this type of stuff. It's actually owned by its members.
So Swift is the original.
Swift is for instance, the original DAO. I don't think people understand this. It's very interesting, actually.
I didn't understand it.
But
I'm not sure I understood it.
No, I'm sure many people do understand DAOs broadly, but anyway, Sergey.
Yeah, so the answer to your question is that the Swift private keys that are so widely adopted and considered secure enough to move and transact in quadrillions of dollars in value don't need to be replaced. They can be reused for signing blockchain transactions, and this is an efficient way to get hundreds of trillions of dollars from the Swift community into the blockchain format instead of all of those thousands of banks and Swift members having to pull out their system and replace it with something which, frankly, banks simply don't do. Banks do not rip things out. Banks layer, right? So that's the first thing. The other thing that I've discovered over the 7+ years working with Swift is that actually the standards that Swift has, like the ISO 20022 standard and others, are very good and widely used standards for defining a transaction. That's another thing that there's no clear reason to replace. If you can define a blockchain transaction in the Swift standard, and that transaction can then be signed by a Swift private key, you've just eliminated a huge amount of friction for all of these banks and asset managers to adopt blockchains, which fundamentally puts them on a path, that puts them on a better path, and that puts our industry on a better path, because I think our fundamental goal should be to get more value into the blockchain format. And even if that value begins in the blockchain format on private chains and interacted with through Swift keys, eventually a portion of it will migrate into public chains, also interacted with by Swift keys. But the more value that we can get into the blockchain technology format, in whatever place it begins, public or private chains, the better off our industry will be. And reducing the friction of that kind of transition is something that should be very exciting to everybody. It's very exciting to me.
Let's actually tease that out a little further. So you've talked about friction, you talked about some of the roadblocks that have been cleared, so that institutions feel a little bit more comfortable adopting blockchain technology. Can you just speak a little bit more about that? What are those roadblocks that are still in place that need to come down in order for institutions to feel comfortable in this space?
Maybe I'll start. I think that kind of first and most obvious is just around kind of regulation and kind of understanding around some of how this technology works. I mean, there's obviously the kind of segmentation of public and permissionless, truly decentralized chains, and what you see kind of more banks that are operating on today in terms of private permissioned ledgers, variations of blockchain, because it's within the perimeter that's set forth from a regulatory standpoint. And so all the banks, they're not going to kind of go out and kind of venture past the regulatory perimeter. I mean, it's just a bit crazy to think about. And then there's also the kind of overall, I think, aspect of education and learning, right? So over the past couple of years, there's been a lot of focus on experimentation and POCs and getting familiar with the technology. But there's still kind of senior management levels that are coming around and understanding how can that fit into their overall architecture, the security footprint, and so forth. So I think fundamentally looking at compliance and security and risk management of it all is going to be the kind of crux of it. And then there's a number of other kind of questions along those lines that are just not fully fleshed out or clear. You think around kind of like legal settlement finality of a probabilistic type of consensus mechanism. How does that work when you're talking about settlement that takes place today in financial institutions, and kind of what that means from a legal standpoint? So there's kind of a bit of an education, and obviously there's the kind of regulatory aspect that needs to happen. And then I think another aspect, we're talking about standards and the work that we've been demonstrating. How can you leverage the existing standards? When you look at the overall crypto ecosystem, the tokenization ecosystem, there's still a lot of work that needs to be done around market practice and standards. And actually, some of the work from our friends over at Euroclear, DTCC, and Clearstream actually came out today, or this week, I should say, with some digital asset security control principles, which are a really good first step in that direction to bring conformity of the regulated financial services industry in that direction. So I'm excited to see that space grow.
Do you have anything to expand there in terms of, like, as a technologist in the blockchain realm? What are the sorts of roadblocks that you still see that are in place that you're trying to or other companies are working on breaking down so that institutions can get on board?
Yeah, so institutions are constantly thinking about how to make money. So what is the market demand that they're going to fulfill? That breaks down into basically better efficiency through things like better collateral management, and then servicing new markets through tokenization. And that trend is massively growing. The RWA market size has become now larger than DeFi, and it's past 150 billion, and it's growing very rapidly. And I think it's going to possibly become even the majority of the value in the crypto industry is going to be in the RWA format. So the first thing is the market demand, which is in the process of developing. Then to service that market demand, you have to meet the regulatory and legal requirements, that Jack described. And that is a very real concern, because these places are only able to exist as far as they can meet legal things. It's not a startup where nobody knows about it and it can just do whatever it wants. They don't exist if they don't meet certain requirements. They'll just be closed because they're super monitored and super oversight over them. The third problem is basically a technology adoption problem. How complex is it to run blockchains? How complex is it to interconnect those chains? How complex is it to get data into those smart contracts? How complex is it to synchronize all of that activity with my existing backend, which runs on Swift messages? Those the first two categories are something that we don't have as much involvement in, right? So demand is going to grow. I mean, we power a lot of RWAs. We're helping grow demand in that way. The legal thing, we're collaborating with folks to make sure they help define standards that make technical sense. It's the third one where we have a lot of experience on. How do you launch a reliable chain infrastructure? How do you connect it across chains? How do you get data into it? And then how do you synchronize all that and allow it to interact with your existing systems through Swift messages, right? So this last one is still a hurdle, but it's something that we've made a lot of progress on. And it's something that is also being made easier because the cost and complexity of running blockchains is continuing to go down. So I see all banks and all asset managers eventually running multiple chains, just like they run multiple databases. So the cost and complexity of the third one is being reduced because chains are easier to launch, and Chainlink is helping solve these data interoperability and systems integration problems.
So it's obviously been, we're in a bull market, but it's been a pretty fraught couple of years for the crypto industry between FTX, all of these, big, whether they be exchange collapses, lender collapses. But, throughout crypto's history, we've also had a question of security. A week doesn't go by, I'm a crypto journalist, where me or one of my colleagues isn't writing a piece about, $100 million, $5 million, $1 billion, well, maybe not $1 billion, but a big hack that has happened. Jack, I'm curious if in your conversations with all of these institutional stakeholders that Swift has, does that security question have the kind of sway, or is it, as looming as I would expect it to be as somebody who sees all these security issues?
Yeah, I mean, security, kind of point blank, is just table stakes. Without it, you're not going to get regulated institutions to the table, right? And so, that underpins kind of all the activity that financial institutions do. And similar for the Swift network, we talk about resilience and operational excellence. I mean, if you don't have the kind of uptime of your platform and the security of it all, you're never going to have actual kind of volumes, especially at the scale of what we're talking about, transacting over your network, right? So that's like the kind of number one priority, I would say. I mean, particularly for the Swift network, but financial services broadly. So I think you mentioned some of these incidents like FTX and Lunaterra. I think it definitely casts a cold light on the industry when those things happen. But I think there is this kind of growing understanding, especially from traditional like TradFi types of players, kind of separating out some of the kind of examples of what's happened versus the underlying technology and blockchains and tokenization itself. Because at the end of the day, some of those things were just kind of centralized failures, not around kind of some of the decentralized capabilities that the industry is often about.
And you think these institutions kind of see it with that sort of nuance that you're
I think it's evolving, right? Like there's a growing understanding of that because people have been focused on this now for a number of years. But they're looking at now, how can you employ that same technology to bring benefits to the financial services industry? And you're seeing that, I think, convergence of the potential of tokenization across not only the private sector, obviously the banks and asset managers and various institutions have been driving this for a number of years, but the public sector is also coming around to it as well. Right? You've got the BIS, who's basically the central bank of central banks, if you will, now talking quite often about the power of tokenization and is announcing a number of different projects or initiatives to kind of test that out with the financial services industry as well. So I think that convergence of the potential is now happening, and it's kind of a question of like, what are the use cases that there's going to be real traction and benefit for? What are the actual business cases behind those that are going to actually drive and warrant investment, and you have a kind of a clear path to an ROI and break even? And then how do you then kind of spur kind of adoption at scaled levels, which is what we're talking about here, right? Because a lot of these things today have happened in fairly niche pockets on kind of small use cases, but we're talking about the scale of the global financial system. It's quite significant, and it needs to be very secure to be able to support that type of volume when it's at that level.
So obviously you partnered with Chainlink. That's why we're all on stage here today. But sticking with you, Jack, like, are you speaking to other blockchain, whether it be interoperability providers, protocols? How deep is Swift's engagement with the industry?
Yeah, we're definitely focusing more on the space as a whole because of the needs of the community and understanding kind of how can we actually support the community and provide capabilities to interact with digital assets, tokenized assets, with capabilities that we don't necessarily have today. Clearly, Chainlink was a natural fit and complement for reasons we were talking about earlier, highly complementary to what we already have in the financial services industry. I would say we have a number of capabilities probably in assets inherent at Swift already that can probably be redeployed and used in ways to bring benefits to the community. I mean, we're having conversations and staying aware of the market, but I wouldn't say we're kind of near any sort of I don't know, type of engagement that like we have with Chainlink.
So Sergey, I want to talk a little bit about interoperability, which is of course your bread and butter. What role does that play, particularly as real world assets start coming on chain? Why is it so important that all of these chains are able to interoperate with one another? And maybe the broader question is, I feel like interoperability in past conferences that I've been to has been talked about as this thing we need to have. We need to have, blockchains that interoperate. Hey, we're moving towards this multi-chain future. We need things like IBC, CCIP in order to facilitate that. Are we actually there? Like, have we made it to this interoperable future already?
No, we're not at this interoperable future right now, partly because of the security problems that you've described. We'd be at the interoperable future if things worked like the internet, where nobody contacts anybody about what database they use in order to send information or value or transact, right? So Chainlink actually today has a 5-year anniversary on mainnet on production. And in those 5 years, it's been secure and hasn't lost value. And also because Chainlink invented Oracle networks, it's the longest running track record of security for all of this type of computation. So I think security is paramount. Generally speaking, in the history of various infrastructure systems, including Swift and other more modern systems like the AWS ecosystem and others, people don't put value into systems that aren't secure and that can't prove that security in various ways. So this is really what Chainlink is built on, and this is why it's enabled over $11 trillion US dollars in transactions at this point over those 5 years, is because it provides that security in a consistent, provable way. So I think the first thing that's held interoperability back is the lack of interoperability systems that are secure and can prove their security. And this has limited a lot of usage in the public chain ecosystem, and it will be a massively limiting factor in the private chain ecosystem because they're even more interested in security because of the value they secure and the high security standards we have, which Chainlink so far in its interaction with those institutions has been able to meet, right? So the first tenet of a good interoperability ecosystem will be that the interoperability protocol can provide and prove security to both the public chain Web3 world and the private bank chain world.
Yeah.
And this is what Chainlink is built to do.
So
what VCIP is built to do.
We talk about this idea of proof. I mean, there's like the capital P proof, like the, zero knowledge proofs. And then there's just the idea of broadly proving that, one asset has moved from A to B, or that a price, recorded by a Chainlink oracle is actually recorded as, it represents things accurately. I wonder, in an institutional, blockchain world, how you bring that proof to bear. Like, I imagine, like, if there's two banks that are trading assets back and forth, and those assets are real world assets, I imagine there's still got to be some trust inherent in that system where you're trusting that the asset is where they say it is, or it's not all going to be on chain in this real world asset world. So, not to use world twice, but how can Chainlink respond to that inherent trust?
Yeah, sure. There's no problem. So Chainlink is a framework for people to configure networks. So you said Oracle in the singular. So it's not in the singular. Chainlink is a way to connect things, and it's a way to validate that what that connection is about is reliable. That can be about data, where Chainlink, for example, when FTX happened, removed the data providers that were weighted towards FTX. And so not a single Chainlink price that was updated on chain was affected by FTX, even though other individual data sources were affected. And the Chainlink system eliminated that anomaly. So Chainlink is not just about connecting things and sending things, because the risk that you describe is real, that the thing that you could connect it to could fail, could be inaccurate, could be corrupted by bad FTX prices, could have reorgs on the destination chain. There's a million different things that can go wrong.
Look at Mango Markets, manipulating. Yeah.
Yeah, exactly, right? So it's not just about connection, it's about validation. And the validation is a dimension of security, right? So the answer to your question is, what degree of validation do capital markets participants want about the different aspects of the transaction? Their validation about the identity part of the transaction might be minimal, because the ability to manipulate the identity is so risky legally and so pointless that it can't steal money.
Yeah.
Their desire to validate price data for settlement, I think, will be high. Their desire to validate NAV data for the valuation of a fund, which is what the purchase price of that would be at that time, will be high. And so it'll vary by the different pieces of data. The thing that Chainlink does is it gives people a way to configure their assumptions around validation and security relative to various pieces of data and various connections to both chains and existing systems. So this is just one of the big things that people should understand about Oracle networks, is that they're not just about connection. They're not just middleware. They're about making sure that that connection actually meets the same or higher or same standards as a smart contract, so that the combination of the smart contract and the Oracle network together creates a deterministic, highly reliable system. And then plugging in all the different existing backends, all the different data sources, all the different identity systems is something that people should configure around their own trust assumptions. But Chainlink gives them a way to do that.
Yeah, and just maybe coming back to the importance of interoperability, I think you were questioning about before. I mean, without interoperability, all these different chains and networks not being able to talk to each other, to the existing financial system, I mean, you're not really going to be able to get the benefit of kind of tokenized assets or tokenization to begin with, because they're not going to be able to transact with liquidity that's inherently kind of developed on or kind of sitting on other networks, right? So, I mean, it's been kind of core to what Swift has provided for the financial services industry for decades, and it's the same thing now kind of going forward. So if you have assets that are tokenized on one chain, but they can't access cash or capital on other chains, you're never going to really have a kind of a deeply liquid market that can actually transact with each other. So I think without interoperability, all these potential benefits that we're talking about, they just fail to materialize. Then are you in a kind of a net worse off position at the end of the day because you've kind of fragmented liquidity, nothing's actually talking to each other, and it's just not actually achieving anything what could be. Yeah.
So was there ever a world where Swift kind of saw blockchain as, I don't know if Swift, it's not a person, but where Swift as an organization, saw blockchain as an existential threat? Because when I told some people I was coming on stage today, and I was like, hey, what kinds of things should I talk about? A couple of people were confused. They're like, hey, doesn't blockchain render Swift obsolete? I got to spice this panel up a little bit. Like, what do you think?
We've been looking at blockchain for a number of years. But I think blockchains, depending on the kind of design of blockchains, they're good at certain things, but less good at others. So from like an accounting standpoint, if you want to actually just prove settlement, this happens. That's it's quite strong, and you can kind of have that resilience distributed across whoever's operating a node and ledgers. But when you think around all of the additional kind of data that's required to actually complete transactions, blockchains are inherently not good at storing large volumes of data. So you need off-chain systems as well that will be able to speak to each other. I think Swift recognizes that there's capabilities of blockchains that we don't offer, and the banks are also recognizing those. Like Swift is a messaging platform. We're not actually affecting settlement ourselves. That's what banks and FMIs are doing, and have the legal qualification to do so. So I think there's a complementary kind of proposition that Swift's network plays. The other aspect is just the kind of pure scale of a network, and actually trying to develop the size of a network is quite a significant undertaking. And so when you're talking about all the different the 11,500 institutions that are connected to Swift that have investment built in, processes, risk, controls, compliance, and everything that goes along with that. I mean, the security and resilience and trust that's underpinning the network is kind of what's driven us to be around for now 50 years. So I think trying to replicate that with a relatively new technology that's, in the grand scheme of things, I don't want to say it's unproven, but it's much younger, right? So I think that's just something that the financial system is probably not at a point of being able to try and take that risk.
Yeah, I'd like to answer as well, if that's okay. I think many people, if I ask them what Swift is, in my experience, they are confused. They do not understand what Swift is. They think it is some big thing that runs the world. It is a protocol. It's a bunch of private keys. It's a shared language. And it's a messaging infrastructure run by telecommunications companies, okay? And it's owned by its members. It's not even a fully for-profit entity. And the member votes are determined by the transaction throughput through the system, which is frankly more attractive than the ownership of some token deciding voting power, right? So I think fundamentally, most of the people that I've talked to about Swift, even some of the people in the TradFi industry, don't understand what it is. Mm-hmm. And I think what Swift does in terms of signing transactions cryptographically, defining transactions clearly in a way that's shared globally, and allowing those transactions to then kind of move in a shared messaging format is completely compatible with the goals and value of blockchains. I think this confusion comes from like a total misunderstanding of what Swift does or how it operates or what its fundamental goals are.
So we all got to Google Swift, is I think.
If this Chainlink doesn't work out, you can get a job at Swift.
No, it's going to work out.
I think we're way over time, but I want to thank both Jack and Sergey for joining me up here, and thank you all for listening in.
Sure. Thanks, Tess.
Great. Thank you very much. Good to see you.